Hey everybody, how are you this evening? My name is Lawrence. This is the Financial Thing. Thursday, peer-to-peer lending and investing live stream. Glad to be back with you. As you know, if you have heard, I was away for a couple of weeks due to some unfortunate family news, the passing of my mother at the beautiful age of 87 years old. So, I took a week off and just kind of got to grips with the idea that she's gone now. And it was very sad. It's hard to sit in front of a camera and be vulnerable, but that's the honest truth. I really don't feel like doing much at the moment, but I thought, the best thing to do when you kind of feel down and you've had life-changing events happen is just to kind of get back on the bicycle and start pedaling. So here I am back with you. Talk about peer-to-peer lending, talk about investing. Yes, I will talk about Bitcoin because it's part of the news and it's part of what's going on in the investing world. But if you can please hit that thumbs up, I would appreciate it. Holly is here, of course, snoozing away as always. We have got quite a small amount, but important things to talk about tonight. I'm not going to make this a long stream, honestly, because I really don't feel like it. But I do want to talk about crowd property, some concerns that I have with crowd property. One of the disadvantages to investing in many peer-to-peer platforms, as I do, is I don't always have the time or the energy to really micromanage those investments. And I think this could be a major downside of investing in too many different things. At one time, I think I had 20 different platforms, and it's just impossible trying to keep up on everything, especially when the platform's an auto-invest one. But that is one of the downsides, and one of the positives of only investing in maybe 3 or 4 different platforms is you really keep an eye on what's going on. So because of what's happened in my personal life over the last 6 months with my mother, I've been back to England from the States 4 times in 6 months for a period of multiple weeks. And even just before that, just kind of feeling a little bit deflated by everything that's been going on. I haven't really had a chance to microscope some of the things that I normally would. So I've had more than a couple of emails ask me about crowd property and what I think. So we're going to talk about that. Yes, we are going to talk about Bitcoin. We're going to look at the Trading 212 portfolio. We're going to do a tiny little bit of peer-to-peer lending news, not a whole lot. We're going to take a quick look at Lonepad and see what's going on with them. So without further ado, just a quick shout out to, hang on a second, let me see if I can get the right button here. There we go. Cufflink, the sponsor of the live stream. Of course, you can earn up to 9.83% gross per annum, over 250 million of property-packed UK investments made. I think that number is over 300 million now since 2016, and 0 investor losses today. Capital is at risk. Please don't invest unless you're prepared to lose money. Any chance that you're trying to get interest, you are going to lose money at some point. It's just the way it is with investing. This interest rate the Cufflink offers can change as interest rates change variably. Join.cufflink.com/financial-thing. Link is in the description. Remember, when I do these ad reads, I'm not personally telling you to invest in these companies. I'm saying take a look at them, do your due diligence. Companies survive, companies fail. It's just the way it is. It's the nature of investing. Been through it my whole life, and it doesn't surprise me anymore. I remember the first time something I invested in failed, and it was such a huge shock that actually that was a possibility that I could actually lose money in investing. But that's just the nature of the game out there. So you got to be watchful of what you're doing with your money. Anyway, quick shout out to everybody here. And thank you, too, for all the emails and whatnot, for the nice, kind words everybody has been sending me. It is hard losing a parent. I know some of you have done it. I've lost 2 now, so equally as difficult. But Oh, and I wanted to talk about life insurance too, an important thing that I discovered within the last week, and I just wanted to give you a fair little spiel about that. Anyway, Patty is here in France. Mark Mason, good evening to you. Colin Perry in the Peak District. Paul Bagworth in Kenilworth. Stephen Hale is in Nottingham. We got John Dale also. John Day, his neighbor. Stephen Hale's neighbor in Nottingham. Peter Vince from Leatherhead. It's damp. Yes, I'm okay. Thank you, Peter. I don't think things are sorted out by any means, but, we're working on it. Mike Powell is ready for his sermon in Bitcoin. Mike in Southampton. Cufflink getting hammered on the forums. Significant concerns. Yes, definitely have my concerns too. Like I said, you got to watch out for all these companies. There's only a few that are doing good things right now, and I don't know. I get told information from the people that run these companies, and I read things, and sometimes it's very hard to figure out what exactly is going on. But I'm still trying to get Narinder on here so he can answer those questions, which now I'm back. Hopefully that will happen soon enough. And Annabelle here is in Spain, and, what can I say? I don't know. Let's just move on. We'll talk about the news. Let's get right into it. I'm going to show you Cufflink right now because, let's talk about crowd property first. I've received a couple of emails and decided to look into my own portfolio. Did see some concerning things. I think 40% in default or past due 6 to 12 months. Not good. I would say if you are an investor through them, my piece of advice would be this. If you have concerns about a company, whether it's crowd property, any of them, it's okay to pull back. It's okay to turn off your auto invest. It's okay to withdraw whatever you want to withdraw and just wait. Sit on the sidelines and see what happens. Sometimes some of these loans past due are for a reason. Sometimes they're in trouble. It's never good when you see any company that has loans that are past due. You preferably don't want to see any, but unfortunately the nature of property lending is that there are going to be loans that fall into trouble. Sometimes the loan to values are so much padding that it's okay, even though you don't want to see it. But if you have enough padding there, it's okay, and the loan can come out in the green, which is what you want to see. But unfortunately, sometimes that doesn't happen. This is why on every single one of these companies' websites, it does have a risk warning. It says don't invest unless you're prepared to lose money. It is a high-risk investment. You are not going to get 10% returns in anything you invest in without taking some form of risk. And people need to remember that. And it's the same with property-backed lending, because if something goes wrong with the valuation, it wasn't valued correctly, something happens to the borrower, things can go wrong and you can lose money. What you don't want to see is the multiple of these loans going into default and it becoming like the snowball. So what I am doing personally is just turning off the auto invest, not putting any more money in, hoping for the best, but understanding that there is risk involved. Now, what I have a problem with is lack of transparency, and when we're told something that is not true or not told anything at all and being kept in the dark, that is a big problem, and it has been a big problem within the peer-to-peer lending sector. There are some really transparent companies out there, and there are some ones that are not particularly transparent that is concerning. So, I have read the forums. I know what's going on. There's people that are concerned. I would say if you're concerned, turn off your auto invest, withdraw what you can, and then just keep an eye on things. That's all you can do right now. So I have sent Mike Bristow an email tonight to invite him to come onto the stream to tell us what's going on. If nothing else, I've asked him if he wants to comment so I can bring you as much information as I can. I'm not going to sit here and say everything is rosy, because when you see defaults, that's never a good thing. So that's what I have to say about crowd property. If I do find out anything from the inside, you will be the third to know, because the person who told me will be the first and I will be the second, so you'll be the third to know. But I do want to show you one company that I think is doing things the right way, right? So let's look at Lonepad. So if we look down here at these loans, and Lonepad has a lot of loans, like hundreds of loans. If we look down here on the right side where you see this loan status that says extended, no ICF, what that means is no interest coverage fund. And you can see a lot of these loans are getting extended. Now, when we come down here, there is this loan 9994199, which is a £750,000 security value with a loan to value of 563,000. So a little bit higher on that loan to value, due on the 10th of April of this year. Now, this is default, no suspension, no interest coverage fund. So I clicked on that because I do like to read these things. I don't often read them because, honestly, again, just having too many platforms I'm invested through, it's not like I have millions or even hundreds of thousands in these platforms. I have an amount that I'm willing and okay to lose if poo really hits the fan. But I do like to read about these things sometimes. So this has a lot of information, and it's very, very transparent. This is what I like about Lonepad. It goes back to the original release of the loan here on the 11th of March 2021. Gives you all of the information, and you can look on, if you are in Lonepad and you want to look at these individual loans, you can, right? But if we scroll down to, let's see, we scroll down, maybe I'm in the, here we go. These are the updates now, starting on the 11th of March. It tells you when the loan was agreed to and paid out, and the money was paid out. But if we go down, it just gives you all the information about that loan, what's going on, when it went into receivership. The loan was agreed to extend by 3 months to allow time for the receivership process to continue. And then 22nd of January, actually my birthday, it shows you here, in consultation with the receiver, we have decided to place the property in auction to effect an expedited sale and recover Lonepad's loan outstanding. The auction is scheduled for late February 2024. The value of the security exceeds the Lonepad loan. Therefore, we do not expect any capital loss. In addition, we benefit from a personal guarantee. We'll provide a further update in due course on the receiver's progress. We provide an updated security table to reflect the current marketing price from the local agents acting on behalf of the receiver. Now, this is what I consider very good, transparent information. It really, you don't see months and months of no information. We've got January 11th, January 22nd, and a January 24th. I expect at the end of February, once the property goes to auction, there will be another update. But I like that type of transparency. This is a pretty high loan-to-value proposition loan for Lonepad. Normally, the Lonepad loan-to-values are in the 40. Let me go ahead and log back in. I'm just going to turn that off for security purposes. But yeah, usually their loans are in lower LTVs. But I do really like the fact that, we have all of this information about all of these different loans. You can see these LTVs here. I mean, some of them are as low as 25%. But that's a good example how I think that a peer-to-peer company should really be super transparent about everything that's going on, good or bad. If you look at the loan list here, you see lots of extendeds on there. I don't worry too much about them with Lonepad because the loan to values are so low. And I know that, Lonepad has that experience with the way they've set up things to take care of these loans in the right way, which I believe they will. So yeah, I wish more companies were doing things the right way. I've always said that I found Crowd Property's website probably one of the worst ones out there as far as usability. It's just not really user friendly, and I have a hard time just kind of navigating around it. I've always told Mike that I wish it was better, but hey ho, I mean, website programming is not particularly easy, and it takes time to get these changes implemented, especially to redesign a whole website. But I do think there is somewhat lack of transparency with updates with Lonepad's loans. Sorry, not Lonepad, Crowd Property. So yeah, anyway, but I'll give you an update as I get more information about Crowd Property. But yeah, things not looking particularly great over there. I'll tell you how it is. So and this is a reason why I just don't invest too much money in any one given peer-to-peer lending company, because I do know there is a possibility of something, going downhill with them. But if we look at also going back to Lonepad now, we've got 16 lending partners, and they just continue to increase their loan proposition, still offering that 6.5%, which is good. They still don't have any loans in the ICF, Interest Coverage Fund, and you've still got that excellent liquidity of less than 1 day. Now, a lot of people will say, well, I'm trying to get better interest rates. I'm trying to get more returns. I want 9%. I want 10%. Well, just remember, the more interest you're being paid, the more risk you're going to take. So when you're looking at a proposition that's a lower interest rate in the 6%, a lot of the times, not always, because sometimes 6% could be completely high risk, but a lot of the times you're going to be looking at a lower risk investment where things are just set up more conservatively, and you're just not taking as much risk. You're also not getting paid as much back. So keep that in mind when you're investing, for anybody that's kind of new to this or looking to get into it. There you go. Moving on. The FCA warns peer-to-peer lenders and crowd funding platforms. The UK financial regulators fired shots across the bows of a number of fintechs offering equity crowdfunding and peer-to-peer lending. This was dated on the 17th of January 2024. In particular, two separate letters to the boards of investment-based peer-to-peer lending platforms and crowdfunding platforms. The FCA referenced the new consumer duty rules, whereby firms must act in the best interest of retail customers. That also goes along with advertising, financial, the way they advertise and offering incentives and things like that. They're not allowed to do anymore. They found that the level of compliance was far below the standard of what we expect. So I think the FCA is saying to these companies, you have a fiduciary responsibility to your investors to, number one, present them with the correct information, to do the right thing by them, and also for potential customers, just be careful how you're advertising to them. And then also, this was the 7th of February, peer-to-peer lenders' wind-down plans are in the FCA crosshairs. The UK regulators are changing their focus around peer-to-peer lenders, with a number of collapses having highlighted their risks to investors. On 25th of May 2021, the FCA wrote to all of the UK authorized loan peer-to-peer crowd platforms to express its concern about areas of potential harm for investors. Amongst the 4 areas listed were the adequacy of a current wind-down plan, their triggers, and liquidity monitoring. So yes, obviously with a peer-to-peer lender now, they have to have a wind-down process that is secure and in place in case the horrible thing happens and the company ends up in administration, so people can try to get back some of their money. And the FCA is now really saying again, and this was a communication that they had in the 15th of January 2024, that the FCA wants to make it clear that it's hyper-focused on seeing better prepared and realistic wind-down programs, and it will take appropriate action to limit the ability of peer-to-peer firms to continue to operate where this is not the case. So basically they're saying, if you don't have a good wind down in place, we're going to limit your potential to operate and possibly shut you down. So very important, especially now with all the things that we see going on. Brick Owner, one of the peer-to-peer lending companies, we have had Mr. Brick Owner here before. a long time ago, but Brick Owner is raising its minimum investment threshold from not £1,000 to £2,500 to tie in with the upcoming launch of its real estate investment trust. Don't know much about it as far as a REIT. I think sounds a little bit risky to me, but do your own research. They want to make sure they have a high enough minimum where they can service people. Just reporting the news. ThinCats ranked as a top non-bank lender for M&A deals in 2023. That's mergers and acquisitions. You know what's crazy to me is that I remember when ThinCats went into administration back in April of 2021, which they were then called the Business Loan Network, which was a peer-to-peer lending that was the peer-to-peer arm of ThinCats. And they went into administration, and the next thing you know, 2.5, 3 years later, they now ranked as the top bank lender for M&A deals in 2023. Now, not being a ThinCats investor myself, they had really high minimum investments amounts. Going off the top of my head, it was like $10,000 to get into one of their loans, and I was just not willing to take that amount of risk. But it's crazy to see that now ThinCats is really just gone way up. And they were funding. It says in his report that in 2023, ThinCats funded 41 merger and acquisition deals in 2023, second behind HSBC. They also have a £696 million funding line from the support of the British Business Bank. So just goes to show you, even though a company goes into administration, they can still bounce back and do things in other sectors and become really, really, really successful doing that too. Let's see. I was just looking through the administration report too for the Business Loan Network through ThinCats just to see what their expenses are like with the cost of their administration. It's available online if you want to read it. £1.149 million for 2 years of expenses for the administrator. I think that's Kroll is the name of the company. So more costs, more high costs for administration that gets passed on to investors. And yeah, if you have any comments on anything, just pop it in the chat. I'll take a look at the end. Got an interesting email. This is switching to kind of investing. It was a nice email too. Just like to read it. Hi Lawrence, firstly, I'm very sorry to hear about your mother's passing. I'm sending you my condolences and thoughts and prayers are with you at this time. I know you're probably not feeling up to answering questions. Well, it's true. But just in case you do, here's one for you. It's not just a question, but more of an emotional state of being that I find myself in at the moment. I recently inherited a low six-figure sum of money. I don't know what to do. I've never had much extra money in my life, so this is quite unusual and life-changing for me, even though it might not be much to other people. My problem is I do not have anything in the way of retirement pension pot aside of some premium bonds. I've worked my entire life and have gotten by, but as I approach my twilight years, I really want to make some financial changes. Going back to this inheritance, I've looked at the stock market and it seems we're at an all-time high, which makes me very nervous. I feel like the day that I invest, everything is going to come crashing down. How do I get over this investment fear? If I didn't invest this money, where would you No, I think that's supposed to say if I did invest this money, but it says if I didn't invest this money. If I did invest this money, where would you recommend investing, and should I put it all in at once? P.S. I'm 47, by the way. I know this is not financial advice or anything you write is merely a suggestion. Best wishes, Harold. Yes, Harold, definitely not financial advice. I could just tell you what I would do, give you a little bit of words of maybe encouragement. One thing that you absolutely don't want to do is just put all that money in the bank and let it sit there getting paid 4%. While inflation is higher than that, so the money is eroding away. You still have time, and you're 47 years old, so Harold still has time to weather any stock market corrections that will happen. He's probably got at least another 13 to 18 years of of working life, so he has plenty of time. I found this interesting thing on Twitter, which I really liked. I saw the other day. People were talking about the same thing. It says in 1929, the stock market crashed. In 1987, the market crashed. In 2000, 2008, 2020, the stock market crashed. In 2024, the stock market hit an all-time high. Zoom out. I think that is such good advice. Whatever you think today, you just have to zoom out and look at the big picture. Now, if we look at my trusty Vanguard US Equity Index Tracker Fund and we zoom out, things look pretty healthy. This chart only goes back, I think, to 2009 because likely that fund, I don't think it goes back any further. Let's have a look. Don't think it's going to go back any further than that. No, it doesn't. But if you do zoom out, you can see from the beginning, 2009, when things were not very good, where we are now. And even if you did zoom out, it would be probably somewhere down here. If we look at our lowly little FTSE 100 graph down at the bottom, which is just puttering along, really struggling throughout, we're talking about 15 years. Usually we like to look back a lot further. But if we do zoom out, at least on the right type of investment, you can see some really great growth. You put it in the wrong investment, which I consider the FTSE 100 to be the wrong investment, you're going to see pretty much stagnation when it comes to your investment, which you probably should be concerned about. So I think what you have to do is just kind of invest, close your eyes, hope that history repeats itself, that growth happens and companies do see growth, and that the stock market will continue to rise up over time. There is no guarantee, Harold. And you asked another question, would I put it in all at once? I think at this point, I would probably put it in, say you have £100,000 as part of your inheritance. Maybe you put in 10,000 for 10 months, and that would get your 100,000 invested over a period of time to where if we do see a market correction over the next 10 months, you're going to get the benefits of the downsides and the upside. That's the way I would do it personally. Some people say it's better to put it all in at one time. But going back to that very important Twitter piece, you go back to 1929 when things looked dismal. People didn't think it was going to rebound. And now we are at an all-time highs have been met in 2024. You asked what I would invest in. Me personally, I like the U.S. market. I always have. The Vanguard U.S. Equity Index Tracker is a good one. Or you could do a global tracker. Either one would see you just fine. Global tracker has about 60% U.S. and 40% other countries. I do like the U.S. because I think that's where a lot of the growth companies are located. I mean, you look at them, they're all in America. Most of them, Apples, your Teslas, your Nvidias, or your tech companies, finance companies, JP Morgan, they're all there in the U.S. So that's why I tend to favor the U.S. for growth. But and then I don't think it would be a bad, I'm not saying that if I had 100K and that was all I was going to invest, that was everything for me. Maybe I'd put I'd obviously keep some money in savings for an emergency, probably 6 months of whatever you need to live on. And I'd throw some, my friend Mr. Bitcoin that I've been saying for the last, I've been investing little bits into Bitcoin since 2016. I don't think it's something you can ignore at this time. A lot of people have been naysayers of it, but we look at investments, right? We look at how can you grow what it is you're trying to grow, and we have to do that by taking risk. I would throw, maybe like 5% into Bitcoin. Just let it sit there for 15 years, see what happens. You may be surprised, you may be happy about that. So, something maybe like 10%, 15% in cash, say 80% into a tracker, and then maybe 5% into Bitcoin. I hope my math works out. That's what I would do. I hope that answers your question. As far as being scared, the best way not to be scared is just not to look at it. Put it in, invest it. Don't look at your balance. Don't look at your portfolio. Just forget about it for 10, 15 years. Come back. I think you'd be pleasantly surprised. The best way to live in fear when you're investing is to be constantly logging into your accounts when you're investing in stocks or anything, and just to keep looking at them every day, because that will drive you out the markets. When you see things drop 20%, 25% like it did in 2020, 30%, you're just going to have fear, and you're going to make the wrong decision, likely sell because you're afraid it's going to go down more and more. Don't look at it. Just put it in. You're not an experienced investor. Forget about it. And I think you can DIY invest. You don't need to go to a financial advisor. And I think you'll be very happy that you did that in 15 years from now. Don't try to get tricky. Don't do what I do. Don't try to invest in individual stocks. You will get burned. I think the statistics are that if you put it into something like the S&P 500, you're going to get about 8.5 to 10% return a year. If you try to invest it yourself, you pick out the wrong stocks. Your average investors are getting about 2% a year, so you're not going to beat the indexes. You're not going to beat the markets. You just won't be happy. You'll constantly be second-guessing yourself once you see those big negatives, minus marks next to your portfolio under certain individual stocks. So go index trackers, put it in, forget about it. Bob's your uncle. Okay, yes, we do have to talk about Bitcoin, the ETFs. I've seen a massive amount of inflow, $7.7 billion of trading volume, 673 million of inflow. Now we have just large amounts of money coming into these ETFs, and it's not going to stop. And these are not going to be the first ETFs we're going to see, I think, in the future. Ethereum ETFs, as there is now legitimacy to Bitcoin. Bitcoin is going to keep flying high, whether you like to believe that or not. It's just going to happen. This is an inflow, by the way, for one day. Okay, this is not total. 673 million came in to these ETFs in one day. Okay, people are thinking they're going to get rich off this. Is that a good thing? Not necessarily. We've seen the prices really start to take off now. I mean, think about this. We were down at 16,000 US dollars just a couple of years ago. And now, since these ETF approvals in the US green lighted, we got 61,000. We hit close to 64,000 recently. It's kind of a concerning parabolic level. I don't like to see it. You know, I'm kind of a slow and steady investor when it comes to this stuff, but you can't ignore what's going on in these ETFs. These ETFs are not going to go anywhere, and they're just sucking up all of the Bitcoins into these ETFs. And sentiment is really good right now. It's not to say it won't have another crash where it drops 30%. Absolutely could happen any day. But right now, things are flying high. Now, one thing, I did see this blog on the European Central Bank, and this is something that is really important to pay attention to. 22nd of February 2024. However you feel about Bitcoin, you know, a lot of people are not fans of this. It's not a product, but this vehicle of storing value. But my question is, why is the European Central Bank giving investment advice? They have an article, and you can look on the ECB blog that came out on the 22nd, really just lashing Bitcoin, giving investment advice, saying that, you know, Bitcoin transactions are inconvenient and slow. And the reason they're doing this is because they don't want people investing in Bitcoin. It takes away their control of money. And they see all this money now coming into this decentralized product, and they don't like it. They disagree with pretty much everything. They're saying Bitcoin is not suitable as an investment. This is the European Central Bank saying this. You know, imagine if they were to come on here and say Tesla, Apple, Amazon is not suitable as an investment. It doesn't. They're saying Bitcoin does not generate any cash flow, unlike real estate or dividends in stocks, and cannot be used productively as commodities. Offers no social benefit, gold or jewelry, or subjective appreciation like a work of art. And the mining of Bitcoin continues to pollute the environment. A lot of really just negative stuff that they don't understand what Bitcoin is. They don't want you to invest in it, whether you agree with it or not. Just to see some piece written on the ECB's blog like that really does make me really disappointed that things like that are even allowed to be put up there. It doesn't make any sense to me. Shouldn't be up there. So that is the banking system that people still believe in, that they are going to allow things like that to happen. And I think articles like this are going to make people shy away from banks and go more into something that's decentralized, even though it is an ETF and it is offered by people like Fidelity and BlackRock. But it does steer people away from the banking system and really make you think, why is that happening? Why are things like that going on? It's disgusting. Anyway, finally, we're going to take a look at the trading 212 portfolio. As the last time I think I checked in, it was a couple of weeks ago. Well, it was probably a week before I went overseas. And, hold on. We have now an account value of $18,973. So this portfolio has been really, really highly volatile, mainly pushed by Coinbase, which you can see here. The position now is 55% in the green. Over the last 1 month, we've seen another big rise up here. We saw this 190 peak and then drop down. So it's been doing really well. It's really propped up the portfolio. Rivian, on the other hand, not so good. We're 25% down on that, but I did add to the Rivian position, even though their books don't look good. But I do believe by the end of the year that if they can become profitable, Rivian will have a really good year when it comes to their stock. Right now, it's not doing very well, but we'll see what happens with that. So you can see I added a position here on the 27th of February for another, how many shares? 58.5 shares. But Creative Realities is doing well, even though we don't have much. Deutsche Bank in the green, 11%. And then we got Green Power, minus 50%, £546 loss. And then Vermilion Energy, 44.96% in the red. I did make a change to the portfolio by dumping the Norwegian Cruise Line shares that we sold here yesterday. They had a really good profit that they reported, and I think the stock was up 18 or 19%. It had been kind of up and down. I just decided to kind of get rid of them at this point, use that capital for something else. We did make a small gain of £60, and then see how much on that one, £49, so 110. But so question being, again, we're sitting more in cash again on the portfolio, 7,185. Looking for a pullback on Coinbase if that hits into the 160 range. If we have a pullback on the price of Bitcoin, then that would be another entry point for me to kind of take some more high risk propositions in Coinbase. But also one other sector I've been looking at is biotech. Probably going to take a little dip in the water in the biotech. The oil just doesn't seem to be doing much at the moment. So anyway, portfolio nudging again around £19,000, which is really good. Trying to desperately shoot for the £20,000 mark. And I'll keep you updated. And again, Harold, if you're watching this, don't do this. Don't invest in these shares. Nor should anybody else. This is complete reckless gambling. The price of these, these stocks and anything else that you see online that you're considering investing in, stock, shares, Bitcoin, whatever it is, just remember that fundamentals don't mean anything nowadays when it comes to stocks and shares. You can look at charts, you can look at financials, but at the end of the day, it's all 100% based on sentiment. If people feel good about a stock, they'll buy and the price will go up. If the general sentiment of a stock or a company is bad or in the negative, even if they've shown good results in accounting and on reporting days, they've shown good results, and you're wondering, like, well, these people just showed a really good profit. Why is the price dropping? It's sentiment. If people don't feel good about the stock, the price is going to go down. I don't care what it is. So you need to really pay attention to what the sentiment of a stock is generally out there in the media and say on forums and whatnot, and that's what really is driving the price, except for maybe Coinbase, because Coinbase runs off Bitcoin pricing, because Bitcoin has been so hyper parabolic at the moment, the price of Coinbase, as well as them reporting good profit earnings. The price has obviously gone up to a crazy amount. So there you go. All right, my mouth is completely dry. Let me go ahead and AccuChap, welcome. I'm just looking at your comments. Mike Powell said the auction last Thursday for the Lonepad property sold for £682,000. There you go. RE stocks. Rolls-Royce has been a scary ride over the last 5 years, but now recovered. Time to leave unless you are a nuclear fan. Yeah. I think just these individual stocks are so roller coaster riding right now. And if you had a large portfolio that was, concentrated on just 3 or 4 stocks, it would be stomach churning, because you don't know. You see these news reports come out. I see them pop up on my phone every day. This company down 20% on bad earnings. This company up 25% on a possible acquisition, and it's so crazy. I mean, these swings are just massive. They didn't used to be like that. So I just wouldn't have any large amount of money invested in, concentrated in just a couple of stocks. It's just so risky. Yeah, Mike makes a good point too on the trading 212. If you do have an account, by the way, and you have cash sat in there, you can get 5% on your uninvested funds. You may as well do that. I just started doing that recently. Honestly, I didn't really pay attention to the fact that you could do that, but it's pretty easy to do. You just turn it on inside your account, and you get paid interest every day. I think I get 80p a day or something like that, but it's nice. Somebody actually asked me, how do you turn on the interest? You can see right here under the portfolio, and if you go on the website, you click on free funds. See here, they're paying 5.2% on this 7,185. So this is I think you have to, I can't remember exactly how to do it, but if you are not earning any interest on your money, it gives you the option to do that. So I think because I have it turned on, it's obviously not giving me the option to turn. I think you can turn it off. I just can't remember where it is in there, but it's not hard to find if you dig around. It's worth doing. So it's not risky, I don't think. But it's not FSCS protected either. So if you want to get that 5%, it is going into a fund that is investing, I think, in bonds or something like that. It's pretty low risk. But just know that it's not FSCS protected. U.S. market seems so much more volatile than the FTSE for individual stocks. Yeah, I mean, but absolutely it is. But here's the thing, Mike. If you, again, look at this chart, what do you want out of your investments? Do you want this with your FTSE? Or do you want that with your US? Volatility is your friend when it comes to investing. If you don't want volatility, you certainly don't really want to be in stocks, because if you put a lot of money into one stock, there is a possibility that stock can take a severe drawdown or even go to zero. Unlikely, but it can happen. It's happened before. Volatility is your friend. If you're trying to grow your portfolio, you have to be able to take volatility and risk. And I would much rather have this blue line than this. Oh, also, I want to say something about life insurance. I could tell you a personal story here. I don't mind sharing, but my parents had a like a Prudential life insurance thing that they took out in the 1980s to cover any possible inheritance tax that might appear on their estate years down the road or decades down the road. My mother missed a payment. She paid into that policy for 39 years. And after my dad died, she still continued to make the payments. It was not a small amount of money. I think it was $6,000 a year. And she missed a payment last year when she was sick. She tried to make the payment. She sent off the check. The check got returned to her, as far as I understand. I don't know what happened to the check. But when the lawyer called Prudential to say, my mother had passed, Prudential then said she missed the payment, so the policy is now canceled and we keep everything. So, if you do have life insurance, you make sure, number one, that you always make those payments, because if you do miss one and there's something in the fine print, that insurance company will take all of your money. Can you imagine 6,000 times 39 years? That's close to £250,000 of premium payments that my parents made. Now, if my dad, God rest his soul, had been a smart man, he would have taken that premium, 6,000 a year, and invested it himself into a stock fund, and that 6,000 would have probably been worth $1 million or $2 million. I don't know how much, but he didn't do that because he didn't know any better. He was not an educated man when it came to investing. But yeah, if you do have a life insurance policy, be very, very careful, because those insurance companies will do anything that they possibly can not to pay you out. It could be a piece of fine print on page 162, clause 1, paragraph 6. They are terrible criminal people. Be very careful. Just wanted to say that as a warning to anybody out there. I know all of the insurance people that sell insurance are going to hate me for saying that, but this is just my personal experience, and it's the truth that I've seen with insurance companies over the year not wanting to pay out when, they're very quick to come for your premiums, for your monthly payment or yearly payment, but when you need something from them, they're very quick to give you every reason in the book why they cannot cover you. So be careful. Anyway, I think that's what I got for you. Yes, yeah, I know. It's a head scratcher. I'm going to have to legally fight it, because it's just one of those things. I think the insurance business is a criminal business, and unfortunately the government stands by the insurance sector for some reason. I don't know why. Actually, in the U.S., you are forced to take insurance in some cases. Like if you have a mortgage in the U.S., you have to have property homeowners insurance on your property. Personally, I think that should be optional, but the government protects insurance companies and banks, so they force you to do it. You don't have any option. But yeah, it's unfortunate. So just word to the wise: if you have especially a whole life insurance or universal life insurance or a weird Prudential policy, make sure that you Know what you're getting yourself into and make sure you pay it. Because if you don't, you'll be in trouble. Anyway, thank you to everybody for joining. Again, thanks to Cufflink for sponsoring the stream. Yeah. I'll be back next week. Oh, quick announcement. Next Thursday, we have a guest on the stream. Jan from Blend. Jan Marciano will be here live at 7:30 UK time. So come join us, and we're going to talk peer-to-peer lending with Jan. We'll ask him about crowd property. We'll ask him about the state of peer-to-peer lending and about the stock market, because he usually provides good information. So 7:30 next Thursday. That is March the 7th. Jan, CEO of Blend, will be here. So come join us. Have a great evening. Have a great weekend, everybody. Love to you all. Thank you. Thank you for joining and for all the support. I'll see you next time. Bye. Take care.